Live from Bloomberg's world headquarters in New York, I'm Sonali Basak. Kaylee Lines is off today. And welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance. Coming up, Bitcoin passes $43,000, its highest level since the April of 2022. We're going to dig into the ETF-aided rally. Plus, we speak to John Wu, president of Ava Labs, his market predictions following the expected Bitcoin ETF approval and the retirement of Representative Patrick McHenry and its impact on the crypto industry. And we'll catch up also with Sid Powell, CEO and co-founder of Maple Finance. He discusses crypto credit as his firm has made over $3 billion in total loans. That's all ahead, but first we get a quick check here on the markets in crypto because, of course, we have another green day after a stunning tear. Bitcoin up more than 3% today, Ether up more than 2.6% today, and you also have the Binance coin also back on the rise. We have Grayscale's Bitcoin Trust, 30 days, just gains. We have almost 6% on the day today, but you have to remember the Grayscale Bitcoin Trust is so quickly approaching closing its discount to net asset value, quickly approaching just 5% below that level as the market expects the approval of a Bitcoin ETF. Now, I want to flip up the board here and talk about just the stunning gains we've seen in Bitcoin this year so far. It's had the best tear since 2020 when everyone was sitting at home trading crypto. But you have to see, remember, 2017 was really the biggest year of gains when the market cap was much lower. When you look at the gains now, we are not retesting the highs that we have seen yet, but 162% rise. When you think about the rise it's seen just since last week alone, you're looking at a nearly 15% jump just since the beginning of last week with the excitement around a Bitcoin ETF. The big question, though, does it retest new highs? Bitcoin now breaking about 43,000, trading at a 19-month high. I caught up last week with Galaxy Digital's Mike Novogratz on the outlook for the digital assets and the expectations of a Fed pivot next year and what that would mean for the cryptocurrency. Take a listen.
Gold, silver, Bitcoin really all should do well if the Fed is finished hiking rates and starting to cut. Nothing is going to go in a straight line, right? Things are going to go up and then retrace and go up and retrace. I don't see anything flashing, triple red right now. Where you've got to be nervous, right? These trends are just starting. One of the mistakes a lot of investors make is the trend starts, you get your first move and you're like, that was a great profit, I got to get out. And then it just keeps going and going.
Ava Labs' John Wu echoes the optimism and writes, quote, Bitcoin ETFs will be approved and the Bitcoin market cap will increase 50% in 2024. I'm pleased to say John joins us now to discuss. Listen, John, on one hand, I understand the excitement around the Bitcoin ETF. However, what is the risk that it doesn't retrace, especially because the crypto industry has lost lenders, exchanges, and a whole host of other players that have brought it to its last set of highs?
That's a great question, Sonali. The market structure is now fully repaired. However, the reason why it's gone up so much this year is because I think Novogratz earlier said the macro conditions or the perception of it has changed. The anticipation of a ton of liquidity with the ETFs coming into the space. But I think people now realize that the fundamentals where real business use cases are actually happening. And there are many, many traditional companies, whether it's in finance or traditional consumer marketing companies, applying the technology for real business use cases.
We'll get back to use cases because I think there are a lot of investors who are wondering what Bitcoin is made for. But when the ETF comes, if it does indeed come and is approved by the SEC, how does that create competition? Are people going to want to trade ETFs or spot?
Well, I think there's going to be two markets. The on-chain people will still want to do it through their mechanisms and have self-custody, but the ETF is a great construct for the person just entering the space. They don't want to deal with the taxes and figuring out how to do the taxes. It's all calculated for them through their brokerages. It's an easier construct. In some way, it's a better user experience for the average person. So there's still a lot of pent-up demand for the average person who wants to get in but doesn't want to do it on-chain.
Now, how do traditional financial services companies, of course, there's BlackRock and another set of big asset managers that have already warmed to the idea of a Bitcoin ETF, but is there still a lot of pushback when you talk to folks in traditional finance, given that's where you've come from yourself?
So I think there's pushback in actually deploying use cases in the sense that they don't want to trip any regulation until there's clarity. However, in terms of using the technology and applying it as a business development function, they are absolutely doing that. So it's more about waiting for the actual regulations to clear, and then you're really going to take a lift off, almost hit an inflection point of critical mass, of massive proliferation of use cases and the asset growth.
What are these use cases that are most compelling that require more investment, especially given when you think about technology, there's more competition when there is thought around future investment? Think AI.
Yeah, absolutely. Well, we can get to AI in a second, but in terms of the use cases from our partners that we're hearing, there's like really 3 or 4 that are really just out there all the time. One, it's a better settlement rail, so to transfer value around. 2, the data that you can collect, and we can go into this later in terms of for loyalty points and other uses, is far more superior than the traditional way of doing it. Then you also have new business models. The thing that we did with JP Morgan and Apollo is a way to tokenize funds, private funds, and allow access for wealth managers. Christine Moy from Apollo said it best. It's taking 3,000 processes to one automated one and saving 20% of the cost.
But there's a difference here. There's a difference between tokenizing funds and buying Bitcoin. Where are you still seeing pushback with traditional Bitcoin, especially when other financial firms, they don't necessarily want to touch it. They want to tokenize their own assets.
Yep. There's a difference between the asset class and the actual business use cases. The pushback from institutions buying Bitcoin, Ethereum, others, is that they don't want to trip any wires. There's a potential, the Treasury and the IRS basically are proposing some rules that make everyone a broker dealer, so that will be a very onerous thing. Unfortunately, that will be a temporary setback and push things offshore, but that's an issue. So that's the things they don't do. Those are the issues that they don't want to get ahead of until there's clarity.
Speaking of setbacks, this idea that Patrick McHenry is trying to step down from his seat. He's looking to retire from his seat in Congress. He was a big advocate of the crypto industry at a time where the industry has been looking for advocacy, new rules, legislation, not just the agencies pushing moves forward. How much is him not being around a setback for the industry?
Yeah, that's he was a big proponent for the space. Our firm has talked to him in the past. He's very knowledgeable about the crypto asset class and the potential technology use cases. So let's mention that first. His not being around next year is definitely, as a proponent in legislation, is a setback, no doubt. But I think it's been proven now with potential ETF and other things that there's global social consensus that this asset class and the use cases need to be here. So it's a temporary setback. I think others that we've spoken to in DC will also carry the mantle afterwards.
But how temporary is temporary? I mean, you've watched Congress kind of play around with these rules for months now, and there has been very little actual movement.
Well, I think we have to wait till 2024. A lot of things in Congress are temporary.
So when you think about also why Bitcoin at this point, it begs the question, you are watching the price just shoot higher. Why do you think it will retest new highs, as we're saying, without the leverage? What causes Bitcoin to make a leg higher besides an ETF, frankly?
Yeah, I mean, some of this run is obviously front-running the anticipation of ETF capability. But like I said before, there are people who just, and institutions who cannot buy it until it actually becomes an ETF. So unlike other securities or stocks or commodities or art, you can't completely front run the news here because literally you just fundamentally cannot buy it until the actual ETF.
Do crypto exchanges survive in an environment where a Bitcoin ETF is improved?
Oh yeah, there's far more than just Bitcoin. Bitcoin is one of many, many. In fact, my prediction is after there is a Bitcoin ETF, shortly you'll see Ethereum, and even better, you're going to have a big trend in ETFs right now are active managed ETFs. Suddenly you're going to have actively managed ETFs for the crypto asset class, and then you're going to have things like Avalanche in there, you're going to have things like Chainlink Coin in there, and all of a sudden it's a whole index of assets in the crypto space.
You're thinking that far ahead. At what point do you get wrapped up into an ETF wrapper?
Well, I just think if you want to do a wrapper, you have to include Avalanche.
John, we have to leave it there. Thank you so much for your time. That is Ava Labs' it's John Wu. And coming up, we're going to speak next to Sid Powell. He's the CEO of Maple Finance. We're going to talk to him about crypto credit, an area where a lot of steam has been dried up in the industry. And we're going to dig further into that big news. Congressman Patrick McHenry's retirement, a move that will impact crypto sentiment on Capitol Hill. And to access all the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg.
It's really not for regulators to say, you know what, that's not an asset that you should be invested in. It is an asset you should be invested in. Let's get it inside the regulated system as much as we can and have the market decide. There already are exchange-traded products, futures-based exchange-traded products for Bitcoin. So why don't we at least give people the most efficient product?
Right.
And let's try to get as much efficacy in the trading market as we can, so we understand it, so people here can have these kinds of discussions. Look, if you asked me 5 years ago, would Bitcoin be where it is today? I would have said that's a tale that I don't think we're going to see, but we're there.
That was former SEC Chair Jay Clayton. We're going to discuss this more now with Maple Finance CEO and co-founder Sid Powell, which provides the technology for credit experts to start scaling a lending business. When you think about just how much regulatory clarity is needed for this industry, away from just approving an ETF from the SEC, what do you need to get the job done at this point?
Yeah, I mean, I think from the perspective of regulatory clarity, it'd be good to see really some guidelines around capital formation. You know, how would it be treated differently if you wanted to, say, do a credit fund that settles loans on chain or that raises funds via subscription on chain? So I think clarity around this. The space that Maple plays in is institutional lending, and private credit has been a big sector, certainly that's grown throughout 2022. As we look at what we would need to do more of that activity on chain, I think clarity around, you know, could you form credit funds on chain? What occurs when people are depositing into pools that might do institutional lending on chain? So any of those would be a real positive move for us. We're less concerned about the kind of the derivative space and more around credit lending and fund formation on chain.
I'm glad you brought this up because already you have massive private credit players like Apollo. We were just talking to John Wu at Ava Labs about this as well, and his work with other big credit funds. You know, without the regulatory clarity, how much really can be done? And why would it be that the private credit industry just gets kind of a big pass when it comes to tokenization when you have the big exchanges facing so many concerns about what a token is and isn't?
It's a really good question around what differentiates private credit from the trading of cryptocurrencies. I think it wouldn't necessarily get a pass, but if you look at a lot of what happens in private credit today, it is largely an unregulated market. So except for the ways that they raise capital. So issuing CLOs, issuing new credit funds, both registered and unregistered kinds, are fairly well-trodden paths, but the actual origination of institutional loans and commercial loans is largely an unregulated space. So I think what you would want to see is guidance around how lending can take place on chain, what needs to happen to protect deposits, what kind of disclosures do you need to make as to what's happening with depositors' funds and that type of thing. I mean, we saw a lot of it start to play out last year with some of the big CeFi lenders, but the trends that have happened this year have been to start to use DeFi rails. So making loans transparent and on-chain, removing and reducing counterparty risk by involving qualified custodians in these processes in terms of managing collateral. So I don't necessarily see it as getting a pass. I just see it as a different kind of regulation for a different type of financial product.
What's the goal here for you? It's interesting to see you partner up and kind of look at opportunities from traditional finance players as they think about lending in this industry, when last year we've lost a lot of lending capacity in the crypto industry. There were full lenders that have ended up facing bankruptcy or otherwise. What role can traditional finance start to play?
I think traditional finance is hugely important. So one of the things that we've tried to foster this year is we've seen the tokenization of real world assets. So from a standing start in January, we've seen effectively 780 mil in treasury bills get tokenized. And this was a really good way to test the water with tokenizing real world assets. But what we really want to see from traditional finance is more capital come into the space. I see the trends that have happened with the growth of private credit. And one of the things that I think is really exciting is this intersection of real world asset lending along with private credit. And this really enables credit funds who are taking a significant amount of share in corporate and institutional lending from banks to capitalize on a new form of technology that I think hopefully could allow lower management costs and better distribution for these firms.
You know, Sid, you were talking about the Treasury market, and I'm interested because you're watching even the most safe parts of the Treasury market, repo markets, see hiccups, and even just recent days. Does tokenization make this market more difficult to access and understand, or less difficult, and why?
I think it makes it less difficult. I mean, the catalyst for why we saw such a growth in tokenization of these assets was that last year you saw Treasury yields go from near zero to above 5%. At the same time, you saw people who were already in crypto go risk off, and you saw reduced access to banking for a lot of them. So it created this kind of perfect storm of conditions where you had people sitting in stable coins on chain without the ability to remove them into the banking system. And so the product that came out of that was tokenization. Now, I think when you increase the speed at which things can move, which blockchain does, that can certainly introduce more volatility. But I think ultimately, you know, that is one of the trade-offs you make to get more uptime, so the ability to transact in these things 24/7, as well as a much lower cost of capital formation. So it's far easier for the average startup who holds stablecoins to get into tokenized T-bills than it is to go open a money market, open a brokerage account, and start buying money market instruments. So
why shouldn't stablecoins just be regulated like money market funds at that rate?
Well, I think we've seen attempts to introduce regulation for stablecoins. I think stablecoins are going to be a really important instrument for the future. If you look at what they're able to do, they really reduce the cost of commerce and kind of continue a lot of the work for the digitization that we saw begin with Visa. And so I think stablecoins are going to be where the bulk of commerce happens over the next 5 years. So we will need sound regulation for them, but we also need to keep an open mind for innovative use cases and actually encourage further adoption of it.
Listen, Sid, we were watching also, I mean, the Patrick McHenry of the House Financial Services Committee announced that he will be retiring at the end of his term. He was a big proponent for a lot of this stablecoin legislation moving forward. How much of a problem is it without that kind of clarity?
I think having more clarity there would be hugely beneficial. We as a platform rely on stablecoins to originate credit. So, we want our customers to be able to feel that they can use stablecoins safely. And I think, a piece of regulation or further regulatory guidance would certainly help, particularly institutional customers feel comfortable lending and borrowing in stablecoins. And I think McHenry was a huge proponent of introducing this legislation. So with him, with him moving on, we'll be looking to see somebody pick up the reins there and look to offer leadership. I think the industry is definitely for it.
That's Maple Finance CEO and co-founder Sid Powell. We thank you so much for your time. And coming up, more on how crypto is losing an ally in Washington. We're going to have more on what that means for all of the crypto bills in the pipeline. We'll talk about that next. This is Bloomberg. This is Bloomberg Crypto. I'm Sonali Basak in New York, and it's like the ode to Patrick McHenry today because the House Financial Services Chairman and congressional crypto ally announced plans to retire after he finishes his term in early 2025. And for more on what that means for digital assets, Nathan Dean of Bloomberg Intelligence joins us from Washington. Nathan, we were thinking so much about Patrick McHenry stepping down from the House seat. We also had Pat Toomey not too long ago stepping down from his seat in the Senate, also a key ally or at least supporter of many crypto legislation in pieces in the pipeline. They're losing allies over here, it looks like. What does that mean?
Yeah, so look, it's not good for this broad crypto framework that everybody is seeking. Patrick McHenry is a big proponent of the Financial Innovation of Technology Act, the FIT Act. I don't think, it really doesn't change our outlook on that. We don't think it's going to pass next year. Even with Patrick McHenry retiring, there could be an emphasis to try and get that done before he does. But we do think this could be potentially positive for stablecoins. As you mentioned in the prior segment, he's also been a big proponent of separate stablecoin legislation. And we think there's a chance that this can get done. But ultimately, if you go into the next Congress, crypto loses a big ally in a very powerful position with lots of access to leadership. crypto's going to need to try and find that next person to take up the void.
Well, it's interesting because it's not for lack of money, if you will. You have a lot of people stepping up, like Coinbase's own CEO, Brian Armstrong, saying that they're willing to curry up dollars from the industry for certain candidates. But do they have enough to really sway votes in their favor for such critical pieces of legislation?
So there's really two things that they need, and they're achieving the first. Obviously, you need to get awareness, and through Coinbase's Brian Armstrong and a lot of the crypto advocates, they're at least making headway with advocacy with policymakers. But the second thing you need is you need to convince crypto skeptic lawmakers in the Senate, specifically Senate Banking Chairman Sherrod Brown, to come onto your side. And they haven't done that. And I don't think they're going to be able to do that. So I think what the crypto industry probably will do is they will try and push for the stablecoin bill. They probably will get it next year, but then the debate goes to 2025. In the interim, crypto platforms work with this regulatory murkiness while the SEC continues to do enforcement action. So it really doesn't change the industry all that much.
Listen, on one hand, you have all this crypto legislation in the pipeline. On the other hand, you have bigger problems at the Senate Banking Committee. The big CEOs are taking to Washington for the big banks tomorrow. Do you think that crypto will become a sideshow in 2024?
It's possible that they could get a question on crypto tomorrow. I mean, I think, the Basel III endgame proposal is going to dominate a lot of this. But so it wouldn't be surprising to see Senator Elizabeth Warren maybe ask a question about her crypto AML bill or about the security of crypto, because that's where a lot of the Senate focus is on the moment, especially with what's happening in the Middle East. But ultimately, though, crypto isn't as important for the banks as it is for, the Coinbases of the world. So it may just be a small hearing on
Nathan,
that.
30 seconds here. How important is the stablecoin legislation for the industry at this point?
Very important. I mean, there is such a regulatory murkiness associated with that product. Really, nobody knows how it's going to be regulated. We think a bill can pass next year that will require 100% high-quality liquid assets, registration with either Fed or somebody else, and oversight from regulators.
Nathan, we thank you so much for your time. Speed Round with Nathan Dean of Bloomberg Intelligence. Now, coming up next week, we have EY's head of blockchain, Paul Brody, joining the program. Like we said, everyone's trying to tokenize. We'll see you then, same time, same place next week. This is Bloomberg.